All right, a very warm welcome, everyone. My name is Nicholas Tan from Kenanga Futures, Sdn Bhd. Thank you for spending your precious time to join our webinar today. And it's a joint collaboration with CME Group in our effort to create awareness and provide education on listed derivatives to all the participants. Please take note also that this futures and options trading involves substantial risk due to leverage factor and may not be suitable for all investors. This webinar is purely for educational purposes. Kenanga Futures, Sdn Bhd accepts no liability whatsoever for any direct or consequential loss arising from any use of the content of this webinar. All right, today we have Mr. Chong here, and he's going to share with us some insights on US index futures. So without delay, I would like to kickstart our webinar today by welcoming our speaker today, Mr. Chong. Mr. Chong, over to you.
Hello, everyone. Good evening. My name is Chong. Welcome abroad. Today, I'm going to share with you some knowledge on trading micro E-mini index futures contract under CME. This is a standard disclaimer I need to show before I proceed with my presentations. Okay, today's agenda, we are going to cover an overview of major US indexes. Then second, we'll be introducing the micro E-mini indexes futures contract. And then after that, we'll assess the factors that is impacting the US indexes price movement. And then we'll proceed to ways to trade the US indexes futures contract. And last but not least, we'll wrap it up with the market outlook. Okay. Okay, first thing about US indexes. In the US, one of the most regarded indexes benchmark will be the Dow Jones Industrial Average, followed by Standard and Poor's 500 index. And then we have this technology concentrated benchmark index of Nasdaq Composite, and then followed by the small caps companies under Russell 2000 indexes. Okay, with this availability of futures contract, index futures contract, we are actually can trade the broad-based, having a broad-based exposure under the indexes instead of buying every individual stock alone. And comparatively, the advantage of that is that we have referring to one counter instead of, let's say for Dow is 30 counters, and other advantage will be the brokerage is way much cheaper as compared to you buy equities counters alone. Okay. Okay, trader can also use index to manage their risk or seek profit from their based on their overall assessment of the market. Okay. Okay, key features of US indexes. Okay, first thing we have the Dow Jones Industrial Average. This is 123 years old indexes. It consists of 30 large capitalization stocks, and the top 10 holding companies represent more than half of the indexes weightage. So we'll see quite a bias to the top 10 companies. So you should, by trading these futures contract, you basically need to pay a lot of attention to the performance of the top 10 counters. And then after that, this index actually basically cover all industry except transportation and utilities companies. Okay, it's a price weighted indexes, which is the sum of all prices of one share of the 30 stock divided by a factor, which is determined by the index company Dow, and the market capitalization as of December 2018 is at 6.56 trillion. Okay, it's widely regarded as a proxy to the general reference to the US market condition. Okay. Okay, this will be the 30 constituent counters of Dow Industrial. Okay, the weightage may change from time to time, and from the latest update of the slide, we have Point, United Health, McDonald's, Home Depot, Goldman Sachs as the top 5 counters. Okay. Okay, in terms of sectors, we have heavily concentrated on top 3 sectors, which is the industrial, IT, and also financials. And then the 4th will be healthcare and also consumer products on consumer stable products. Okay, next it will be the S&P 500, which is launched as 1957, which is the first US cap weight index. It consists of 505 large cap stock. And this one is this index weightage is more balanced and well diversified, which the top 10 constituent only made up 21.9% of the entire S&P 500 index. Okay, and the market capitalization will be stand at 23.7 trillion as of April 2018. Okay, this will be the leading indicator for US equity markets and widely regarded as the most accurate gauge to the performance of large cap companies in the US. Okay, this is top 30 constituent of S&P 500. We have the top 5 are heavily related to information technology and also finance counters. Okay, sector-wise, it is more concentrated to information technology, healthcare, financials, communication, and consumer discretions, rather than comparing to the Dow Jones Industrial, which is more heavily linked to industrial. Okay, next will be the Nasdaq. As you might already aware, Nasdaq will be a highly concentrated index related to technology counters. Okay, it consists of 100 counters that is non-financially related, and the top 10 holding represented 56% of the index. And the current market cap is actually at 7.22 trillions. And in terms of counters wise, this is a top 30 counters, which is leading the top. It will be Microsoft, followed by Amazon, Apple, Facebook, and Alphabet. Basically, they call it the FANGs. Okay. As you can see here, in terms of sectors, this is 45.5% in technology, and then 21.46% in consumer services. Then the rest will be healthcare and others. Okay, the last one will be the Russell 2000. Okay, this is regarded as the benchmark for small caps company in the US. And this consists of 2,000 companies. And the market capitalization currently is as 4.2 trillion as of December 2008. Okay, we might not be very familiar with the names in the list here, as it is a small cap companies. Okay, in terms of sectors, it is heavily linked to financials, healthcare, information technology, industrial, and consumer discretions. Okay, that's in terms of the indexes. As for the companies, this is the company that we listed in. There is the first column will be all companies that are listed in all the three indexes, which is Apple, Cisco, Intel, and Microsoft. So basically, when you treat these indexes, the performance of these four counters you have to watch carefully and pay attention to. Then followed by the middle one will be the counters listed in Dow and S&P 500s, which is in green color. Okay, mainly pointing Chevron, Coca-Cola, Disney, ExxonMobil, Home Depot, Johnson & Johnson, JP Morgan, Merck, Pfizer, Procter & Gamble, United Health Group, Verizon, and Visa. Okay, in the S&P, whereas the last one will be all those counters that consists within S&P 500 and Nasdaq itself, which is mainly Alphabet, Amazon, Facebook, Netflix, and NVIDIA. Okay, next we'll proceed to contract specifications for micro E-mini indexes. First, we have the micro E-mini Dow. The underlying will always, as usual, will refer to Dow Jones Industrial Average. Contract size will be $0.5 times the Dow Jones Industrial Average Index. At minimum price fluctuation is 1 point, which is equal to 50 cents. Okay, available month will be the quarter month, March, June, September each year. Trading hours is a 23 trading hours market. This is the Malaysia times for daylight saving and end of daylight savings. Okay, it is financially settles on the third Friday of the contract months. So latest margin is 605 per contract. Okay, next will be the micro E-mini S&P 500s, underlying S&P 500s with contract size of $5 per S&P 500 index point, minimum fluctuation 0.25, equivalent to $1.25. Similar to the Dow Micro Index, the available contract will be in March, June, September. Trading hours the same. Expiry and settlement is the same. Latest margin will be $693 per contract. Okay, the Nasdaq 100 micro E-mini contracts is every point of Nasdaq is times 2. And minimum fluctuation is 0.25 equal to 50 cents. Others will be similar to the previous two contracts, and the latest margin is 836. Okay, for Russell, it is $5 times Russell 2,000 points. Minimum fluctuation 0.1 index point equivalent to 50 cents. The rest is the same, and latest margin is $357 a contract. Okay, this is the information we get from CME. So far, the micro E-mini contracts week 1 performance are actually managed to record the most successful product launch in CME history. From here, we can see that we have a huge demand and good response from all the market participants in these micro E-mini indexes futures contracts. Okay, this is the total volume, cumulative volume since launch for micro E-mini contracts, and you can see that it is on an increasing pace, momentum. Okay, in terms of the demography, so the most popular will be micro E-mini S&P 500, followed by the micro E-mini Nasdaq, and then micro E-mini Dow. Last but not least, will be the micro E-mini Russell 2000s. Okay, this is a summary table of just now the contract spec. As you can see on the bottom three row. So the average daily volume E-mini stands on top, followed by the Nasdaq, and then Dow, then last will be Russell. So the average daily range, the highest is, the range will be on the micro E-mini Nasdaq, then followed by S&P 500, and then mini Dow, and lastly Russell 2000. Open interest on average basis, as predictably, is S&P 500 micro E-mini contract, followed by Nasdaq, and then Russell. Then last will be the Dow micro E-mini contract. Okay, this is the hourly average volume. The purpose of this slide is to show you that this is Malaysia time. The purpose of showing this slide is to show you that the active volume hours in Malaysia's time will be start from about 9 p.m. Malaysia time until 3 a.m. And if you are worried about liquidity under our working hours, it is not that bad, and it is in a picking up pace. As you can see that S&P 500 have the highest volume, then followed by Nasdaq, and also Russell 2000. So if you were to treat this contract, if you like slow, predictable, and linear movement, basically you can treat the Asian hours. But if you like big movements such as big and high volatility, active participation kind of market, then basically you can treat the 9 p.m. Until 3 a.m. sessions. Okay, reason to trade micro E-mini index contract. First thing, all the E-minis contract are 1/10 of the initial margin required compared to E-mini contract, normal contract. So which is require lower out capital to start. Okay, and then due to the small size of this contract, basically you can have a more precise and accurate hedging ratio against your equity portfolio. And then this contract, this is ideal for beginners that haven't traded any U.S. Indexes Futures before, and they can actually have a taste of it. And at the same time, they can actually enjoy the same movement like the index in the E-minis, but with less volatility in terms of equity movement due to the lower tick value. And then it is also a good place where you want to test your new trading strategy before migrating your entire investment to the E-minis contract. So if you have finished doing your back testing, everything, and you would like to start on having physically involved in trading the futures contract in indexes, you can try out the micro E-mini contract rather than jump straight to the E-minis, which have a higher volatility movement. And of course, this is lower brokerage, obviously. Okay, now we are going to assess the factor impacting the U.S. index movement. Okay, obviously, fundamentally, we have the release of U.S. economic data of GDP, CPI, trade balance, non-farm payroll, jobless claim, and retail sales, durable goods, and etc. And then the second most important one will be the Federal Reserve interest rate decision announcement, and then followed by what we also currently having is the U.S. corporate earnings seasons. This is the link that you can go to view the earnings calendar for all the company in the US that is going to release their financial result quarterly. And then, of course, US government policy like QE, corporate structure, and also trade policy like trade tariff war. And then also impacting the price movement will be the US dollar currency rate, and then any other geopolitical developments. And also the economic data from China is getting more influence to US market, of course, because both parties are the top two economic of the world, and their trade relationship is so close that China economic data has started to have an impact on US indexes. And also you might need to pay attention to all the FANG's company stock performance. Okay, for key data announcement, the first one, most important one, will be the non-farm payroll, which is on the first Friday of every month, and it is positively correlated, meaning that higher figure will be positive to the index movement. And also we'll have the second one, most impactful one, will be the Federal Reserve interest rate decisions, then followed by employment rates, jobless claim, durable goods, GDP, consumer price index, and also the purchasing manager index. Okay, I put GDP not on the top three is because GDP is a lagging announcement where it is actually reported 2 months after the quarter, so which is a lagging. So basically what have already take place in the market already priced in the GDP, most likely, unless the GDP is actually reported actually way beyond expectation, and there may be recorded massive growth or massive drop in GDP, then it will have an impact. Other than that, it will be basically more or less priced in. Okay, just to illustrate on charts the relationship between, I use S&P as a comparison here over all the economic data. So first thing is the US GDP. The higher, the better. And of course, this is total non-farm payroll data. Non-farm payroll data basically is actually all the jobs created under, except for the farm jobs and also the, what you call this, the non-profit employee and also private household employee. So basically this representing, if meaning to say that if the US citizen have jobs, economy tends to do well. Okay, this is changes of non-farm payroll. This is also reported as the same day as the previous one. Okay, this will be the interest rate, federal interest rate as compared to S&P 500 price movement. And then we have the ISM Manufacturing Purchasing Manager Index, which is also positively correlated. And for jobless claim, it is actually negatively correlated, which means that lower jobless claim is good for the economy because there is less citizens claim for jobless benefit in the US, as if they have job, they won't proceed to have jobless claim, which is good for the government spending and also the entire economy. Okay, durable goods order, which is positive correlations. Okay, now I'm going to share with you ways to trade the micro E-mini futures contract. First thing, of course, the purpose of the futures contract is to provide hedging or risk management tools to those who have exposure in the index-related counters. So you can hedge against your equity portfolio. And then you can actually, as these different index have different sectors concentrated. So basically you can use this as a sector play. And then you can also benefit by the smaller, you can actually have a smaller size equity index link exposure to the respective benchmark index itself. Let's say like you buy one contract of micro mini Nasdaq. Basically you have, it is actually similarly you have a small exposure to the Nasdaq counters itself, but at a smaller scale. And then, okay, you will have directional trade, taking exposure based on your bullish or bearish assessment of the market. Of course, intraday is one of the options, intraday trading. And then you can also do calendar spread trading by taking advantage of mispricing between different contract months under the same futures contract. Also, you can capitalize on inter-market spread trading, like you can buy micro E-mini Dow and sell micro E-mini S&P if there is a mispricing. And then you can actually trade these indexes around during the economy data release. And also you can also take exposure like what we are having now during corporate earnings seasons. Just like last night, Facebook, Visa, AT&T, and Point have released their result. And basically, these are the heavyweights counter that have impact on the index movement. So if these counters report better than expected earnings, then basically you can take a long position in the micro E-mini index futures contract. And like last night, all these three, the Facebook, Visa, and AT&T reported better than expected earnings, which resulted the index reach record high. Okay, this is an example of a directional trade. So basically, what this strategy do is we will buy when we see the signal cross the 50-day moving average. Okay, let's say, for example, this bar here, if the bar cross above the 50 MA, basically we will buy at opening on the next day in this bar. And then this one, the circle here without crossing the line, will be the rollover period. We have two rollover period here. One is in March, one will be in June. And here you see the another signal to sell. So basically, when you buy here, you are actually take profit here and continue to have initial a buy position until you see a sell signal. Then you sell and reverse to a short position. And then after you see a signal to buy, basically you cut loss and initiate a long position. And the next day you basically cut and short again. And this will be another signal to long, to cut your short position and turn long and proceed with rollover here. And as a result of this trade, as you can see on directional trade take place, we have 6 trade already closed with 1 trade still holding on. Okay, and all of these trade resulted net profit after brokerage of $702. Okay, another way to trade will be another example that I would like to show you here is the intermarket spread trading. Okay, first example will be, as you can see, this chart is actually a chart that I have normalized all the indexes into percentage performance. As you can see, the green line will be the Nasdaq. Nasdaq actually outperformed the S&P 500 index and also the Dow Jones Industrial Average Index. Okay, from here there is few strategy you can use. One of it is to catch basically mispricing. Like for example, as you can see here, the S&P 500 are basically having a higher percentage gain from the Dow. So basically, if you see that the line started to converge, basically you can actually buy S&P 500 and sell the micro E-mini Dow, and then as the different expand return to normal, then basically you can unwind the interspread and profit from it. Another example will be like, okay, let's say that you foreseen that the technology sector in the US will continue to outperform the overall average sector. So, but you are, let's say from now on, you are not sure about the overall market direction. So, but what you, based on your assessment, what you know for sure is that the technology sector is going to outperform, for example. Then basically you can actually buy one lot of micro E-mini Nasdaq and then sell one lot of micro E-mini S&P 500. So with this, by doing this, there is a few scenario. Okay, scenario A, let's say that the technology sector did outperform the average sector. Then basically you have Nasdaq up 12% and then S&P up only 9%. So by doing so, you resulted a profit of 545. Okay, let's say that the market is bearish, but the Nasdaq down less than the S&P 500. So this scenario will result that you still end up with a profit of 250. And then the scenario C is market is bullish, but Nasdaq is underperform the overall average index. Then basically you will incur a loss of 250. And then scenario D, you have a bearish market where Nasdaq is underperformed by S&P. So you resulted higher losses of 145. Okay, and another one, these last two scenario is less likely to happen, but the chances is there to happen is where Nasdaq up 2%, S&P 500 down 2%, this will result also a profit. And then the last one will be the most undesirable result, Nasdaq down against you and also S&P 500 also against the trade. So you resulted a loss of 528. So basically with this strategy, you basically, you have gathered all the possibility scenario, but with only two possible outcome, which is likely outcome, I have to say, but not entirely accurate, but it is hypothetical theory. So basically you have gathered all the possibility scenario with the outcome of half of it is in profit, half of it in losses. But the downside of this thing will be if the thing is correct as compared to you only do an outright trade, you have less profit. But at the same time, if let's say if the market really against you like this, then basically you have lower losses as well. So this is basically a more safer kind of trading strategy that you might consider when trading the micro E-mini indexes futures. Okay, last but not least, we'll proceed to the technical outlook. As you can see, market still pointing to a new high, historical high, and the momentum is still going with only a significant correction on the last quarter of last year and also in May, and then market basically continue to reach high. So here it is overall is still bullish, but the only thing to take notice or cautious is that if we might have a so-called negative divergence between the prices and the MACD. So basically what happened is if from here market started to come down and you have the MACD started to cross down and go below the zero level, then basically we might experience a bigger correction, just like the one happened previously from December beginning of last year till last quarter. Is basically more or less a negative divergence. So you might have to take care, similar to S&P 500, or is still bullish. You have to take cautious of the negative divergence, similar to RSI as well. Okay, so Nasdaq will be slightly more bullish as it is highly concentrated to the technology counters, and if you can see, we can witness all the counters like Amazon, Facebook are recorded higher and higher earnings. So basically, this is reflected in the Nasdaq index itself. So it's still bullish overall. But having said that, the Russell 2000 or small cap sector are not really doing well. It's failed to reach the high recorded last year. So this is pretty much in a sideways range bound kind of movement currently for Russell 2000. Okay, this is the point and figure chart for E-mini down. I only able to show the point and figure chart in E-mini's contract because micro E-mini data is rather limited. So I use this as a cross-reference. Okay, it's still bullish with higher high recorded and break of previous high. Similar to S&P 500, higher high, still in bull run. And this is the Nasdaq, also in an uptrend. Okay, this will be the Russell 2000, which is in the sideways after correction, a reversal. Then now currently in a sideways range bound market. Okay, market outlook summary. So I am actually moderately bullish both technically and fundamentally. U.S. economy, I think it has peaked but remains sound. This is mainly because of the current tariff war with China. This is one of my major concern that will result in U.S. economy to peak. And then overall U.S. GDP is still at a higher range, and we have another GDP coming out tomorrow. So you can trade around that release, and then also the employment rate remain resilient. The economy continues to create jobs. So basically, in terms of consumer spending, which is still good. Retail sales has been still good. So, and then last but not least, the Federal Reserve have started to adjust to a dovish policy as compared to the hawkish policy implemented earlier, as they see there are some economic data that is stagnant, especially in the manufacturing side. Okay, that's for the outlook. And then this will be the coming second half. This is the concern and possible development that is going to have a negative impact on the overall index performance. So first thing will be the Treasury yield curve inversion. It has been quite a number of months already. So if this thing continues, so it is not good. And yield curve inversion is from the previous past recession. This is the leading indicators, because every recession happened previously are being preceded by Treasury yield curve inversion. Okay, and then if US and China fail to reach any agreement to reduce the tariff, this is going to be a burden to both countries, and the last victim will be the consumer, of course. And for me, my assessment is I will anticipate US and China to reach a reduced tariff deal rather than a totally zero tariff deal, because there are quite a big significant difference between the two economies, and both parties are trying to protect their advantage. So it is quite hard to reach a totally zero tariff for me currently. And then also, as you might aware, our friend Mr. Donald Trump, he might implement tariff on other major US trade countries, which currently we have Canada and EU, and previously he planned to implement tariff on Mexico, but pull back on last minute. And then coming next year will be the second term Trump presidential election. Will he get elected? So if Trump will fail to get re-elected, then basically we might see some changes in corporate tax in the US. And then also what's happening in China now is the sluggish economy with increase in corporate bonds default rate. And last but not least, due to the nomination of Boris Johnson as Prime Minister of UK, we could have a hard Brexit, which is not good for the Eurozone, and those countries have high trades with the European Union. Okay, with that, I summarize my presentation today. Okay, one thing I would like to highlight here will be our service. This is a service that we provide to our valuable clients. First thing, we provide an advanced trading platform with charting features for both mobile and desktop version, free of charge. And then we have daily commentary covering most of the market or product that we offer, with also market related news or notification via email and WhatsApp. And then if you want, you can always call to make an appointment for us to have a one-to-one tutorial for you, be it in how to use the trading platform or any knowledge about futures trading. You can call us to have an appointment for a one-to-one session. And then if you face any problem, we have a trading desk ready for technical support, as order execution, and other trading account related service for you. Okay, if you have any additional question or maybe a long question, then basically you can email to the email address stated on the screen. Basically, the micro e-mini contract is actually a specially designed contract by the CME to basically cater the retail investor needs because they customize it to a lower margin. So that's actually is an opportunity for you to trade in a lower margin environment, and then at the same time, it is a good place where you basically can have a feel by hands-on trading the futures contract. And rather than you back then without the micro E-mini, you have no choice but to trade the E-mini contract, which is great, but the volatility is much more wild and high, big as compared to the micro contract. So this is basically a good chance for you to try your trading system. If let's say you have monitor the market for a while or paper trading, then basically you can hands-on to and try the micro E-mini contract. Give it a try. And last but not least, of course, trading futures contract involves substantial risk. Always manage your losses and have a good risk management module in your trading system. Thank you.
Okay. Great. Thank you, everyone. Should you have any further queries, please feel free to drop us an email at bcrm@kenanga.com.my. We appreciate you being here and hope that you enjoyed the webinar today. Thanks again for joining us and hope to see you again in our next webinar.